Good morning, children. Today we are here to start the chapter Bank Reconciliation Statement. Now, you all have studied the chapter called Cash Book, where you have seen that there is one type of cash book known as double column cash book. A cash book with both bank and cash column on the receipt side as well as on the payment side. The relation of this chapter bank reconciliation statement is with double column cash book, bank column. So children, today when I'm starting this chapter, I take this that you all have practiced well your double column cash book, which records bank transactions on the debit and credit side. Whenever a business is maintaining a double column cash book with all the banking transactions recorded in the bank column, there is a simultaneously a book prepared by the bank for the account holder, which is known as passbook or bank statement. So whatever transactions are recorded in the bank column of cash book are also simultaneously recorded by the bank in a book known as passbook. I don't know how many of you have seen passbook of any bank account. If you have seen, you will have to see certain things in it. If you haven't seen, then please ask your parents to show you the passbook or a bank statement. Now coming back, we have to start this chapter bank reconciliation statement with the knowledge of cash book, which we have already gained from the chapter, and there also what is needed is double column cash book with bank column. When we are in chapter bank reconciliation statement, we will specifically be dealing with the bank column of double column cash book, and there will be another book coming up called passbook. So before we start this chapter, I will show you how a passbook looks. So children, this is a specimen of a passbook of a business which is named as Messrs. Tall and Short. Lajpat Nagar, New Delhi is the location of the business, in account with Punjab National Bank. So this business, which is known as Tall and Short, has an account, a current account in Punjab National Bank, MCC Defence Colony, New Delhi. And the specimen of the bank statement or a passbook looks like this. So it has, from the leftmost side, the first column as date, second as particulars, third as withdrawal, fourth column is deposit, then this is debit or credit depending upon the nature of transaction, and lastly there is a column known as balance. This balance is same which comes in the end of a ledger account as balance CD. The difference is, in a ledger account the balance is done mostly at the end of the month, whereas in passbook the balance is with every transaction there is a balancing amount. So having seen the subheads from left to right, let's go with the transactions recorded here. I'm going to read out few of them. This is given in your book, so you can, after this class is over, see this specimen in your book also. So this is year 2019. The transaction is January 2 by cash, and the amount is written in deposit column 40,000, and there is credit aspect of this 40,000 deposited in the bank account. It has a credit aspect, and the balance is also 40,000. The same amount 40,000 becomes your balance because there was no other transaction before this. Now at this stage you should understand that this transaction written here in particulars is about cash deposited in bank account by the business Messrs. Tall and Short, and for which you write in cash book the journal entry bank account debit to cash account. And for that same entry and posting in cash book, there is a simultaneous posting in passbook by this language by cash 40,000, and therefore the balance on January 2 in my bank account is 40,000 because I deposited rupees 40,000. Now why is this credit? See, when you write your cash deposited in bank in cash book, it goes on the debit side. That means it is written on the debit side to cash account in bank column. So whatever is debited in the cash book has an opposite representation in cash book as passbook as credit. This deposit column is actually credit column. I repeat, for this deposit, you must write down CR here when you see in your book, mention credit here. And for all the payments made by the businesses, the posting is on the credit side, which is payment side of cash book. And when it comes into passbook, it will be opposite, withdrawal. And withdrawal will carry debit. So withdrawals carry debit in passbook, whereas deposits carry credit in passbook. And hence this is written as DR or CR. So at this stage we can say debit of cash book is equal to credit of passbook, while credit of cash book is equal to debit of passbook. So when cash is deposited 40,000, it will carry credit balance in passbook and the balance represents 40,000. I hope this is understood. Now the second transaction which is reflected in this passbook of Mrs. Tall and Short is on January 4, which says to Furniture Dealers Limited, and the amount is posted in withdrawal column 6,000. This means the business Mrs. Tall and Short had made payment to this party known as Furniture Dealer Limited through a check. The journal entry for this in cash book is Furniture Dealers Limited account debit to bank account because the payment is made through check. And since this is a check payment, it will also come in your passbook in the withdrawal column because money will be withdrawn from my account, that means from the account of Tall and Short, and it will get transferred to Furniture Dealer Limited. So 6,000 is in withdrawal column, and remember this withdrawal is debit. The previous transaction balance had 40,000. So now from this 40,000, the 6,000 will be subtracted and the balance becomes 34,000. This 40,000 was my balance in bank account, and balance in bank account is a credit balance. Now after the second transaction 6,000, my balance has reduced to 34,000, which is still a credit balance. Credit balance means my favorable balance. Favorable means I have a positive balance in my bank account, because at times when bank overdraft comes, it becomes negative also, which will carry debit sign instead of credit sign. But after second transaction, my balance in bank account is 34,000 credit balance. I hope this is clear. There is another transaction on January 4 to Das and Company. The same explanation which I had for the previous transaction. This has a journal entry in the book Das and Company account to bank account. That means it is recorded on the credit side of cash book in the bank column, being check paid to Das and Company, and that amount is 12,500. So it is getting withdrawn from my bank account. So my balance previously standing at 34,000 will reduce by 12,500, and the balance comes as 21,500, and still it is a credit balance. Then comes on January 10 by J. Johnson and Company's check, and this time it is in deposit column. That means the business Tall and Short has received a check from this party J. Johnson and Company, and this check has been deposited in bank account. 25,000 will be the balance. Why? the previous balance was 21,500 plus this check deposited in my bank account. It adds up to previous balance and it becomes 25,000, and this is still a credit balance. The next transaction is on January 12 when a check is paid to Roy and James because it is in withdrawal column. So I said the check was paid to Roy and James. Now my balance will reduce from 25,000 previously minus 10,000. It will become 15,000. The same explanation goes on January 15, which was on January 10. A check has been received from B. Babu and Company and it has been deposited in my bank account 7,600. So naturally the balance has to increase from 15,000 plus 7,600 to 22,600. Now on January 16, the cash is deposited in my bank account, which is a contra entry you have studied in double column cash book. So when you deposit cash in bank account, that means Mrs. Tall and Short Company has deposited cash in bank account, the balance will increase in the deposit column by 3,000 and the balance, sorry, the posting is 3,000 in deposit column and the balance increases from 22 to 25,600. Then on January 20, there is an opposite transaction. Cash has been withdrawn. It is coming in withdrawal column. So this is cash withdrawn from my bank account, which is again a contra entry according to double column cash book. And here it is coming in withdrawal column 5,000. So my cash, my bank balance will reduce from 25,600 minus 5,000 to 20,600. So these are few transactions of this passbook, which is of the business Messrs. Tall and Short in Punjab National Bank. And remember, this is a current account. We have studied that in cash book. This is a current account passbook, and I have just read and explained you these few transactions from January 2 when cash was deposited to open this account till January 20. The background of this chapter BRS is understanding of passbook transactions also along with cash book transactions. So children, we just now saw few postings in the specimen of a passbook of Mrs. Tall and Short. So this is how a passbook looks. So whenever there is an entry made in the bank column of double column cash book, whether in the receipt side or on the payment side, the receipts entry are also posted in the passbook in the deposit column simultaneously, and the payment entries in the cash book are also posted in the withdrawal column simultaneously. Which means if the same entries are posted, then on a particular date, the balance shown by the cash book should also be similar to the balance shown by passbook, because we are doing entries in both the book. The business or the account holder does the posting in cash book, whereas the bank or the bank people, they do the similar posting in passbook. So when postings are done in both book, the balance on any particular date should be same. But actually in practical life, this does not go same. It has to have various reasons due to which the balance shown by passbook will differ from the balance shown by cash book. And that is why the existence of this chapter, bank reconciliation statement. So now I'm going according to the meaning of this bank reconciliation statement, which is a statement prepared by the account holder. Account holder is the businessman himself or his accountant on a particular date to reconcile the bank balance as per cash book with the balance as per bank passbook, showing entries because of which the differences between the two balances exist. The difference may be caused due to an error in cash book or passbook, or check issued not having been presented for payment, or check having been recorded in the cash book but not deposited in bank. A statement showing the reasons or causes of differences is prepared. This statement is known as bank reconciliation statement. So now we are going to see the need and importance of bank reconciliation statement, which is prepared by the account holder, that means the businessman. This statement brings out the errors, if any, committed either in the cash book or in the passbook. So the first reason why we prepare it, so that we can find out if there is any error existing in cash book or in passbook. So this is a good method of finding out or locating our errors done in accounting process. Second, undue delay in clearance of checks deposited is known from the reconciliation. So we are going to study this point in detail when we move into the topic reasons or causes of differences between balance as per passbook and cash book. And there I'll explain you this point, clearance of checks. Regular reconciliation discourages embezzlements. See, there are many businesses where there is quite a chance that some things can be embezzled. That means things can be manipulated, it can be a loss for the businesses. So bank reconciliation statement puts a check on such mishappenings by discouraging it. That is what is the meaning of this third point. Then reconciliation helps in verifying the accuracy of entries recorded in the cash book. So that's quite natural. We are making this statement for a particular purpose, for which one of the reason is verifying the accuracy or the perfection level of our entries. And last, it says it shows the actual bank balance. This we are going to see when we are going to prepare step by step bank reconciliation statement. Now we are going to see what is the meaning of passbook, which I have already explained you with that specimen. So what we saw in the specimen of Mrs. Tall and Short just now before this explanation is known as passbook, and these days the trend is to issue it as a bank statement. So when we say passbook, it has another meaning. It has another word called bank statement. Both of them carry the same meaning. So what is a passbook or a bank statement? It is a copy of account of the account holder, that means the business, in the books of the bank, which is issued by the bank to the account holder, and the account holder compares the entries in the passbook with the entries in the cash book and determines the entries because of which differences between the two balances exist. So this is the meaning of passbook or a bank statement. So children, I'm coming back to this passbook of Mrs. Tall and Short, where I already explained you that cash was deposited on January 2, 40,000 in the bank account, and therefore the balance on January 2 is 40,000. Now this is passbook, whereas the same entry is in cash book also. So you all know it, in double column cash book, this is only the bank column which has been represented here. Although it is from double column cash book, we have ignored the cash column. We have picked up only the bank column. So this amount is for the bank column, both on the debit side as well as on the credit side. It's not a cash column, it is only bank column, which is written here, bank column only. So on the same date, on January 2, when the cash was deposited in bank, so the entry is bank account to cash account, 40,000. That 40,000 in the passbook is the same amount on January 2. So if you can see here, on January 2, cash book is also showing 40,000, and we have seen that passbook was also showing the balance 40,000. But when the month ended on January 31st, the last transaction entered here is by interest collected on government securities in the deposit column. The balance of passbook on January 31st reflected by this passbook is 24,300. So just keep in mind this amount, 24,300 is the balance CD of passbook. Now let us see if the balance CD of cash book is the same amount. So if we come on January 31st, we see the balance CD of cash book reflected as 23,700. And what was the balance of passbook? It was 24,300 on the same date, January 31st. and this 23,700 will be the brought down figure of cash book balance on February 1. So if we come back to this date, January 31st, then the cash book shows a balance of 23,700 of Mrs. Tall and Short, whereas the passbook shows the balance of 24,300. So there's almost a difference. There's almost a difference of you can say few hundreds amount, right? So this difference is arising due to few causes or the reasons which we will discuss in our next class, that what are those reasons or causes due to which the balance of cash book and balance of passbook on a particular date shows the different figures. That is what the meaning of bank reconciliation statement is. A statement which is prepared by the account holder on a particular date to reconcile the bank balance as per cash book with the balance as per passbook, showing entries because of which differences between the two balances exist. So remember, the cash book balance just shown in the example 23,700, whereas passbook balance shown 24,300, and the purpose is to prepare a statement called bank reconciliation statement. This is where we are going to end today's class. I hope you have understood the introduction and the background of preparing bank reconciliation statement in connection with cash book and passbook in your mind. So next class we are going to discuss in detail those causes or the reasons for the differences between the two books. Here I end today. Thank you. I hope you have understood. Please revise from the book the content taught today in this video, and do note down in your book all the content shown here in the video along with this specimen of passbook and cash book of Mrs. Tall and Short. Thank you. Have a nice day.